Hey everybody, it's Mark Johnson here, and wow, what a crazy week we had last week with the elections on Tuesday. I went to bed on Tuesday night and didn't know who I would wake up to as far as who our next president was going to be. And then the Fed cut the rates by 1/4%. And what I'm going to do is break down what that means for interest rates today for you and me going forward. You know, we all thought that interest rates would get a little bit better. And boy, it's just kind of, at least in my mind, it's kind of taking their sweet time trying to get there. But anyway, let me just break this down a little bit for you here and show you where rates really are. Last week, rates came in at 6.79. It's not the highest it's been, but it's getting up there. It's actually 0.75% higher than what it was in September. And so last week during the elections, we saw that interest rates right here really started to, go up, but they hit this level right here. There's no really level of support, but it just was crazy. These are huge swings that we're looking at right here during these 2 days here. And when we see what's happened there, I'm really surprised that rates didn't, they came back down. Not quite as much as what we were hoping. This is the Fed funds rate, or the 10-year treasury, excuse me. But hopefully, we're going to see some interest rates coming down just a little bit. This is the bond market right here. Excuse me. This is the bond market right here. I don't know why it's not coming up. Well, these are 10-year treasuries, and these are the bond markets. So anyway, sorry about that. So you see that they kind of hit this floor right here, and then they started going up. So when bonds go up, that means interest rates are going to start coming down. And so what we look at in the mortgage business is we look at the bond market to see where interest rates are going. Usually the 10-year treasuries, they will show us really close what that's going to be, but really interest rates for to watch what interest rates do, like, right now 6.7. 9 is the average in the United States. When we see the bond market do a little bit better, rates automatically go a little bit better. If it gets a little worse, rates automatically go and get a little better. The problem is with a 10-year treasury, sometimes they move a little bit different. And so you might see the treasuries actually, get a little bit better, but then the interest rates don't come down. And that's kind of a crazy thing too, as well. Well, that's kind of my report for today. I'm just here to say that we don't know what's going to happen with rates. We think that long term they're still going to come down, and we hope they will. And we'll just keep you up to date here on the channel. All right. Thanks a lot. Have a great day.